Len Evan here with Loyalty Home Group at Real Broker. It is September 6th, 2024. I wanted to talk real quick about rates, the economy, rates some more, and basically everything that's going on in the real estate market. So this morning, the Fed or whoever sends these reports out, basically the job report numbers came out, and basically what we're looking at is there was supposed to be, they were projecting something like 160,000 new jobs, and there was only 141 or something like that. I think it was 165 projected, 141 actually happened. So that's a multiple month trend of not enough jobs being created. And then I was reading a report recently where some of the previous numbers, job report numbers, were incorrect. My personal belief is that some of the records have been falsified all year. I don't know, I've been joking around saying it's like Enron. The people who ran Enron are the ones who are counting these things. But what I watched this morning is that the 10-year treasury is basically dropping like crazy, right? So it nosedived, it kind of shot back up, and now it's back on its way down again. The Fed has basically said there's for sure going to be a Fed interest rate cut on the 18th of September. The big debate that everybody's having is this going to be a quarter point, or is this going to be a half a point drop for this interest rate drop? That's what we don't know. Now, based off the jobs report, everything I'm already reading this morning is saying it's probably going to be a half a point. What does that mean for interest rates, right? So interest rates, I think, are something like right now, the Fed rates, and I don't know it off the top of my head, but it's like 5.5 or whatever it is. Dropping it down, if it hits, say, 5%, doesn't necessarily mean all of a sudden that mortgage interest rates, for instance, are at 5%. There's always a spread, right? And so what that interest rate that the Fed has is what they call the overnight interest rate. So banks borrow from the Federal Reserve at that rate. They turn around, they loan it out, and then the banks want to make a profit on it, and they need to make a profit on it, and so that's the difference in the rate. Now, the thing that's always interesting is the Fed has not touched the rate in over a year. So it's been sitting at the same, but it's at the same Fed rate, we've seen 8% interest rates for mortgages, and we've seen all the way down to where we are right now, which I think is something like 6.35. Now, when I got into real estate, and I'm going to sound like an old man, right? But when I got into real estate in 2003, 6% was a good rate. I mean, I think we got our first condo in Chicago at like 5 3/4, or maybe even it was 6 1/4 interest rate. So that was a good rate back in the day. And historically speaking, it still is. However, when you look at, the difference in pricing from 2003 to now, when you're borrowing $100,000, for instance, at 6% versus 4%, your payment doesn't really change too drastically. I mean, it changes, but not detrimentally compared to, when you're borrowing $500,000, $600,000, whatever it ends up being. So what we've seen, or what I'm expecting to see, is that if the Fed drops the rate a full half a point, am I predicting a mortgage interest rate of all of a sudden going from 6.35 to now we're under 6%? Are we going to be like 6.85? I don't think so right away. I think it'll probably trickle down. But the reality is that when you start to see interest rates in the 5s, things change dramatically in your buying power, in the landscape of being able to purchase. And what it's also going to change is the demand on housing. Now, what we've seen over the last year is that in in Phoenix at least, and even in Chicago we're seeing it now too, we're seeing inventory creep up. Now, inventory sat pretty flat all summer, at least in Phoenix. I mean, I really pay attention closer to the Phoenix inventory than I do Chicago's. I mean, obviously I live in Phoenix, so I'm more tuned into that. But we just watched the inventory just kind of slowly creep up. And what I'm expecting, because like I said, we've seen just even the last month and a half, we saw rates where we were quoting 7.777 for the longest time. And now I'm like, I can quote 6.35. I mean, that's a big drop from 7 to 6.35 that's a big drop in interest rate. So in 2 weeks, basically, we're going to find out how much more it's going to go. Now, with the 10-year treasury dropping today, I can almost guarantee that if we reached out to my lender and said, hey, what are rates doing today? He's probably going to have a happy smile on his face and throw me a thumbs up and be like, oh, rates are looking good today. So if the 10-year treasury stops where it's at, like if it just keeps kind of going down and mortgage rates continue to drop over the next week, then my guess is that we're going to be able to see 6.25, maybe even lower. So I absolutely, I don't want to jinx it or anything, but I would absolutely think that by the end of September, we will see rates in the 5s. Now, I'm not saying 5 on the dot, but 5.95, 5.98. Now let's talk about that real quick, right? So we have a client under contract right now where I think they used 2.3% of the purchase price, and they were able to buy the rate from 6.75, whatever, down to 5.25. That as a permanent rate, not a temporary buy down, not an ARM, but an actual permanent rate buy down to 5.25. Now, if I go to a new build, most of them are offering 4.9. So at 4.9, it's not really doing me much good. But at 5, I mean, it's just basically what I'm saying is that with a very small amount of money, I mean, not small, tiny, zero, but in the big realm of things, you're going to be able to buy a residential resale property for rates very close to what the new home builders are offering. Now, new home construction has gone nuts over the last 2 years because they have bought huge blocks of money and they've been able to buy these rates down. I mean, we've got properties under contract with new builds where they're at 4.5, 4.25. They're doing like they're doing these 3-2-1 buy downs where year one's at 2, then 3, then 4. Maybe it's like, yeah, so 2.9, 3.9, 4.9, and then it settles at 4.9 at the permanent rate. So to be able to compete with the resale homes from a rate perspective is going to change the landscape completely. So if you've got a house that you're trying to sell and you're like, man, the rates are horrible, it's coming. Like, not much time, you're going to be able to compete completely, and you're going to see a lot more buyers coming out and taking a look at properties that are on the resale market versus just new homes. Now, why would I want a resale home versus a new home? What's the benefit of going resale versus brand new? Well, one, you're looking at more established neighborhoods. Like, I'm driving around the neighborhood right now. The trees are tall, they're mature, grass is green, the neighborhood's established. Yes, the homes are a little bit older, but there's a lot of charm in this neighborhood, right? A brand new neighborhood, well, you're dealing with construction, you're working around construction workers, everything's, all the trees are small, there's dirt everywhere. You get a brand new home, so let's talk about the positive there. I mean, that's an absolute positive. Yeah, you got a brand new home that you get to live in, but your backyard is dirt, so now you've got to pay for landscaping. So if you want a pool, right now I would say you're probably looking at about a minimum $50,000 for a cheap pool. So that's just to get the pool in. That's not including the landscaping that gets attached to that or anything. So now you've just basically purchased the pool, but you still need to do everything else in order to be able to actually use your yard. Whereas one of these resale homes that I'm driving around right now, any one of these, they've already got the yard. Somebody else has already, you know, forked over that money, invested that money years ago, over the years, to improve, to do the landscaping. So all of this stuff is already taken care of. And, you know, like I said, I'm driving through and I got these, you know, it's a nice feeling, established, warm neighborhood. Grass is cut, everything looks good. I mean, new homes developments are amazing. Don't get me wrong. I mean, a lot of them are coming up, like they've got these amazing community pools and playgrounds and all sorts of cool stuff, but that's not for everybody. And the other flip side of a brand new build is you may not want to live where the new builds are, because most of the new builds are in the outskirts of town. You know, if you're like, look, I work in Phoenix, I don't want to drive from Queen Creek or Santan Valley to get to Phoenix. I want to live in Mesa, Tempe, Chandler, or Gilbert. Well, resale is pretty much all you're going to be able to do. And a lot of my resale clients have basically put their plans on hold over the last couple of years because the rates were so high, and they're just like, I need a 4-bedroom house. I got this many kids. I can't move into a 2-bedroom condo, like, in order to make the numbers work. So reality's coming back, affordability is coming back, back to the high inventory. So the higher inventory, we're at a point where our inventory is just at that point to where it's a buyer's market. So if you're a buyer right now, here's what I would do. So I'm gonna end with this. If you're a buyer right now, this would be my strategy. Give me a call. Let's get out looking at some properties. My lender will basically hold off on locking your rate until after the Fed meeting. So whatever he quotes you today, and if he says, all right, so based off of everything, your monthly mortgage is gonna be $2,500 a month, it's gonna be cheaper than that, right? So that's the other good news right now, is that whatever you're being quoted right now, you don't have to, if you put a property under contract today, you do not need to lock that rate until after the Fed meeting. So you're in good shape from that perspective. So whatever you're being quoted right now, it's going to be cheaper. So that's the good news. And right now, there's an excess of inventory compared to, you know, what it's been. So sellers are going to be a little bit more willing to negotiate and help pay some closing costs. You know, whatever it takes, maybe do a rate buy down so you can get. I mean, I'm anticipating being able to see people get a 5% interest rate with a buy down from a seller, like in the next 30 days, and have it not be astronomically costly. So give me a call if you're looking to buy anything. Now is a great time. If you wait till spring, and I'm just going to be honest, if you wait till spring, it will be probably too late. Everybody shops in the spring. Sellers' anticipation in the spring is higher. They're less likely to negotiate. Sellers in the fall are more likely to negotiate. There's a lot of properties out there right now that have been sitting there for about 60 days. Those sellers are getting antsy. Jump on it now. Give me a call. Let's go find you a house.